Your life journey doesn't stand still, and neither should your wealth. Welcome to Wealth on the Move, the podcast. Will Hoffman offers investment advice through Private Advisor Group, which is a federally registered investment advisor. The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult with the appropriate qualified professional prior to making a decision. All right, welcome back to another episode of Wealth on the Move, the podcast. I'm your host, Will Hoffman, founder and president of Hoffman Wealth Management, and I am coming to you from vacation. I am in the club room of my in-laws' condo development, so forgive the plaster white background. It was the best we could do to make sure that everything looked good on video and on YouTube. But we are, the market doesn't sleep, and that's why we're doing this while I'm on vacation, because we want to bring to you a quarterly market update like we did after the first quarter to talk about what the market has done and kind of our view forward. And today I have a really special guest, Andrew Opdyke, Senior Economist from First Trust, joining us to talk about what happened in the second quarter and kind of what we see going forward in the third quarter. So Andrew, welcome to Wealth on the Move, the podcast.
Will, thank you so much for having me.
We're excited you're here and excited to kind of talk about what the markets have done, where First Trust views the next quarter. And, while I think these are important, you and I both know that looking in the market in quarterly increments is kind of a fool's errand sometimes. And, it's time in the market, not timing the market, that's important. But first, let's start with, introducing yourself, your background, and your role with First Trust.
Yeah, I'm a senior economist at First Trust. I've been at First Trust for about 15 years. I was in the tech industry for a little bit before that. My background, I did my undergraduate in economics at a school in Michigan. I did my grad work at Northwestern University's Kellogg School, did my CFA program. Really what I do day to day is I spend my time, my mornings in the data, a lot of reading, a lot of research. We go to the source. You turn on the TV, you get a lot of narrative. You turn on the radio, you open up the newspaper, there's a story to sell. What I care about is the numbers. I care about the math. And when I'm not in the data, I spend 40 to 45 weeks of the year traveling across the United States, traveling globally. Just recently, I came back from New York last week. Before that, I was down in Chile and Peru, Mexico City. We hit every state basically in the United States where I get the chance to talk with financial advisors. I get to talk with businesses. I get to talk with investors, because there's the stories that you hear, and I want to see how that's being played out in life. So that's what I do day to day. We forecast what we see coming up. And right now, there's about 72 teams that forecast the numbers. They submit them to Bloomberg. If you turn on the TV and they say consensus was expected, we're part of that. And we're always testing our models based on how close do we come to reality. They rank every group, 72 teams on Bloomberg. We are right now ranked as the number 2 most accurate forecasting team internationally. So we feel good about the models.
Congratulations.
As you mentioned. Yeah, I mean, as you mentioned, it is one of those things. It's hard making forecasts, especially about the future. You never know exactly what's going to happen, but the data, I think, gives us our best path, our best idea on where we're heading, and helps back out some of that emotion.
And First Trust is very data driven. Can you talk about that for a second? I know that, I've seen your CEO and chief economist, Brian Westbury, talk a lot about the data and why the data is important and more important in the narrative. But can I kind of hone in on that before we get started on some of the data?
Yeah. So I mean, kind of our motto is math wins. And that is, as you know, so much of what happens in the investing world, so much of what happens in life in general, emotions are an incredibly powerful thing.
Sure.
And you think back just in the last quarter, if we think back to Q2, right, it's only three and a half months ago that tariffs really started to ramp up and we had Liberation Day. And you think about how people react in those types of environments. They react on instinct, they react on gut, not necessarily on logic. So if you go back throughout history, if you think about economics is really 50% history, 30-ish% theory, and 20% is finding really good data, finding where the best information comes from. But it's that, history not rhyming but or not repeating itself, but often rhyming.
Right.
We always want to go back and say, if we've done something like this before, what happened? Not what do we think could happen? What's the worst case scenario, best case scenario? We have found that time and time and time again, looking back, structuring, thinking things through logically, it's not going to get you 100% of the way there, but it's been one of the most reliable paths for getting to where you want to go over time.
Right. It's funny you say that. My good friend in our last quarterly analyst, Ryan Dietrich, says that all the time. History
Yeah.
doesn't repeat, but it often rhymes. And we had kicked off the second quarter with Liberation Day, April 2nd. And really, this second quarter of 2025 was a pretty wild one, to say the least, with tariffs and tariff discussions kicking off Liberation Day, or kicking off the beginning of the second quarter, to where we are now has really been a lesson in, you mentioned all those things, but 0% of that is emotion, and how
Mhm.
not giving into those emotions is important, because really, in a very, very small period of time, which is only 3 months, and in the scheme of our money, in the scheme of the markets, in the scheme of growing assets and growing wealth and our wealth moving, 3 months is not that long. But maybe for you, and I know for us, it was a very interesting 3 months, and maybe a lot longer than what we would have appreciated. So can you talk about the second quarter a bit? What happened, where we started, where we are now, and how that played out?
Yeah. So, the second quarter, like you said, and if people have not seen that interview you did with Ryan Dietrich about a quarter ago, about 3 months ago, fantastic discussion. Another one I'd highly recommend if people go back about a month ago when you talked with Dr. Wynn and talked about this psychology,
Yeah.
talked about what drives that, how we think, how we react. And basically it shows you, we as humans, we have a lot of flaws in our thinking process and our emotional process that often get in the way. One of the analogies she gave that I thought was so fantastic is, if you're driving down the road and there's fog outside, what do? You focus on the lane lines that were drawn when there wasn't fog.
Right.
You focus on those pieces that you can control, and you move from there. But in the second quarter, people kind of ignored that. The beginning
Yeah.
of the second quarter, we got Liberation Day, where the tariff numbers came in higher than anticipated. Now, I'll tell you, since the beginning of the year, I've been kind of playing off this 48-hour rule. Okay, this 48-hour rule that says when Trump comes out and says something, wait 48 hours and see if he does something. Because
Yeah.
we had seen earlier in the year when he put the tariffs on Canada and Mexico, some on China, but particularly with those Canada and Mexico tariffs, they got announced, they got implemented, and they were in effect for a day or two before negotiations started, and ultimately they got delayed. The Liberation Day tariffs were actually in full effect for a grand total of about 13 hours. But if you go back and look at the data in April, how did the market respond during this period of uncertainty? We saw a tremendous drawdown, a very quick drawdown, and then we ended up seeing, as some cooler heads prevailed or people started to realize things were getting delayed, companies were adapting as they typically do, we saw one of the fastest recoveries in
Yeah.
history. And so the story in Q2, infotech started to return, comm services was returning, utilities, which did well in the first quarter as well, and I think is still leading. Our industrials are leading so far this year. Those continue to play out, but we saw this wild swing in emotion, and we saw a wild swing in the markets. Now, coming into the third quarter, the questions around tariffs are still there. We're still sitting here. Trump has put this August 1 date on some additional tariff pieces, but now we are getting a little bit more certainty because we've got the bill passage, the one big, beautiful bill, or Elon Musk calls it a disgusting abomination.
Yeah.
What we see throughout history, and this is going to be another example of it, is that one side says, a piece of policy, an action that's taken is the end of the world. The other side says, no, this is one of the greatest things we've ever done. The reality is always in the middle.
Right.
And so second quarter led by early emotions, and then it kind of evolved based on activity, a re-ramping up, a look forward and saying that those actions we thought were going to be so consequential were not as impactful as we thought. And I think we may see that again here going into Q3.
Yeah, and it was interesting last quarter, being on the front lines of those emotions, because you guys give us the data. We try to translate that to our clients so that they're getting an understanding. But a lot of times it doesn't matter. It is emotion. It is because it's their money, and that emotion isn't lost on us. We have to be those cooler heads that prevail. In the second quarter, it was tough, trying to I guess, see the forest through the trees when it came to tariffs and making folks rationalize that, listen, these haven't been in effect long. They may not be in effect very long. And it was, every headline was a new emotion. Every headline was a new trade. Every headline was a new reality, that very similar to what happened during COVID, was you kind of had to sit back and just trust your plan and trust those lines that were painted on the road before the fog hit. You mentioned that analogy from Dr. Wynn. What an incredible analogy for our entire profession is we do the planning, we do the conversations, all while we have a clear vision. When the fog hits, make sure that you are revisiting those lines and revisiting that plan. And I'm glad that struck you as much as it struck us, and hopefully struck our listeners and our clients. So when there's a lot going on. We have, the Fed starting to have conversations about interest rates, and a battle over Fed chief, which may or not play out the way the headlines are moving right now. What do you see as far as the Federal Reserve and inflation, and where that route could go when it comes to inflation and interest rates?
Yeah, I mean, it's very interesting that we're sitting here now 3-4 months in since some of the initial pieces of the tariffs went into effect, and that was the discussion coming out of the Fed was, we need to be cautious now on continuing to cut rates. If you remember last year, starting in the late part of the year, they cut by 0.5%, then they did two more 25 basis points, quarter point cuts, so they cut by 1% in the last 3-4 months of last year. Well, here we sit 7.5 months into the year, and they've been on hold the entire time, saying we're uncertain. Even they are impacted by uncertainty. And I wish, again, this was an area where they had spent more time looking at the history. We're sitting here in July. We haven't really seen inflationary impacts. If you look at CPI data, consumer prices, over the last 5-6 months, the time period where you would expect to see these tariff impacts hitting, we've been running at a 1.8% annualized rate on inflation. It's been running below 2%. Producer prices have been coming in low, and the Fed has kind of pushed it back. There was actually news out this morning from one of the Fed people in Cleveland that said, hey, we are a bit surprised. We were surprised that we didn't see as much impact as we anticipated. And maybe it's just going to come later. But here's the way I think about it. And, we spend a lot of time talking with organizations. So I spend a lot of time talking to consumers. And I said, there are going to be impacts on inflation coming in categories. Car prices went up when the tariffs came in because of steel and aluminum, or the prices of bringing things in from Mexico or wherever we're importing those pieces. But if you're a consumer sitting in the world today, sitting in the US over the last 2, 3, 4 months, and let's say your car broke down and you had to buy a car, you couldn't repair it, you couldn't go buy a used car that had already been imported and avoided it. If the worst case scenario hit and you had to buy a new car, and that new car cost 15% more, it's not that you're just going to say, hey, this year I'm going to spend 15% more money. I'm not going to pull back in any other area. I'm just going to spend more money on the car, and everything else stays the same. What people have been doing is they're pulling back in certain categories. We've seen some people pull back on travel. We've seen them pull back on eating out. And, it's interesting to me because, go back 6 years ago. Go back to 7 years ago, 2018. Remember when we escalated with China the first time around, Trump 1.0? At that point in time, China was our number one trade partner. And when we escalated with China, we were having this same conversation. Whether we're talking about the computers that we use for these conversations, the lights that are on, the clothes that we wear, virtually any restaurant or building you walk into, there's components of what's done in so many industries. Pieces of that come from China. And there was concerns that escalation was going to lead to a pickup in inflation, but we never saw it in 2018 either. In fact, inflation in 18 was lower than it was in 17, lower than it was in 16, and it was lower than it ended up being in 2019 because companies, people adapted to the environment that they were in. So I do believe as we progress through this year, I do think the Fed is going to cut. I think they're going to cut 2 times. I think we're probably going to have to wait until September, October in order to get that. They've got a meeting later this month. I don't anticipate they're going to do anything. But the longer we go where the inflation impacts haven't been felt, the more they have to look at that and say, okay, maybe we really have come down on these inflation metrics. Maybe we don't need to let the uncertainty impact our decision making, and we're going to proceed on the path that we were on.
Okay, so now the market in quarter 3. one of my favorite market topics, and it may not even really necessarily be a market topic. It's just a broad-based economic impact topic, AI, and the impact that we're seeing on, again, as consumers, as a business owner, we are trying to analyze and adopt AI wherever we can to run a smarter, more efficient business. Where do you see that having an impact really across the globe when it comes to impacting markets and our individual wealth?
Yeah, no, I mean, there's so many organizations, and it's impacting things at a corporate level. It's impacting things at a state level. I mean, just recently, Trump was out in Pennsylvania, and we heard news that Google was announcing they're going to be doing work in Pennsylvania with energy development. We've seen massive investments on that front, not just this year, but over the last 2-3 years. AI is certainly a central topic, and now, critically, the big beautiful bill, whether you like it or whether you hate it, there's a couple pieces in there that's going to impact Q3. It's going to impact some of these companies, and those companies in the AI space have some notable exposure to some of the additional tax changes that are coming through. Full expensing on some of the R&D, full expensing on some of the new property, plant, and equipment, that was in place back in 2018, but it had been phasing its way out. There are incentives here today for companies to continue to invest in the AI sphere. Now, I go back through history. Again, history is a major piece for me. And I go back to the dot-com period. I go back to the 1930s and the broad expansion of electricity. And you think back to that. I mean, what was more impactful economically, productivity-wise in the last 40, 50 years than the internet, right? It absolutely transformed the way we work. And we wouldn't be having an AI discussion today if it weren't for the internet and the rollout and that data infrastructure.
We have two young folks in our office that are 24 and 25, and they were born in 2000 and 2001. Yeah. And I was in college starting in 97 when the internet, I got my first email address when I was a freshman in college. So that's what the excitement about this is like. It is like pets.com and stamps.com and everything was a .com, and now everything is an AI. The way, in my opinion, of the market is it's going to be the same, but better, more responsible. The market went nuts in 98 and 99, really based on ideas, not even based on any earnings or any structure or any infrastructure or anything. And now it's not just ideas, it's actual useful tools that we're able to put into place immediately to speed things up and to do things more efficiently.
Yeah. And these are companies, if you look at the companies today they're involved, they're higher revenue generators than what we had in the late 90s. There's more real activity taking place and adoption's happening at a quicker pace. The ability for us to interact with, engage. I still think it's going to take a little time. The more we deal with AI, as with any new technology that comes out, there's pros and there's cons. And that's where we need to figure out where the balance is. This makes people more efficient. If you're an expert in an industry, you're able to leverage that understanding more quickly, but we have to figure out, how are we working this in schools? How are we working this with people coming in? Somebody likened, I think it was, can't remember the name. It's somebody from Andreessen Horowitz said, AI today is like having 1,000 interns at your disposal, right? Yeah. The amount of information that it can process, it can summarize, it's really impressive. Now we're still at that stage where it's like, you still need to make sure you understand the data. If you just listen to everything that's coming in, you can have a garbage in, garbage out, but it's growing at an exponential rate. The quality of what it can produce is growing at an exponential rate. The amount of data it can process, sift through, and make determinations on is growing at an exponential rate. And so I do think you'll see the impacts sooner. And you've already got organizations. You got Amazon coming out and saying, we've been able to use this tool to help us run software updates, which sounds like a menial task, but they said it saved them hundreds of thousands of man hours of a repetitive task. And, this is something, when you think about the medical, we sit here today where we're living longer. And the AI is already finding novel protein structures in medicines. It's been able to do some things to try to find and identify cancer screenings earlier as we live longer, right? This is a tool that helps us live better as well. Right. We are sitting here today. I saw a stat the other day. There's more 100-year birthdays today than we've ever had before. You start going, I was in a Walgreens store the other day picking up some stuff, and then, they have the shelves of all the birthday cards. They got the 20s, the 30s, and they had ones down there for 100, 110. And I'm like, that is kind of an incredible time period we're in. We've never worked less physical labor. We've been moving from physical labor towards more intellectual pursuits, which tend to be higher paying. They tend to be higher margin. It's one of the reasons that the US compared to international, our return on investment, our cash flow return on every dollar that we put into companies is a solid 2-3% higher than virtually anywhere else in the world. And it's because we lead in these spaces, the high value added areas, the cutting edge pieces. And the world wants to engage with this as we sit here. And the big, beautiful bill, I think, is going to incentivize a lot of investment in this space. Some deregulation that's coming is going to continue to boost this space. It puts us in a strong position to continue to be leaders in the technology that's central not just to what we do and how we live, but what the world is aspiring to as well.
Yeah. And I mean, I'm one guy, but get on this AI trend, start to learn about it and how to use it. And, you know, my oldest son, he's 14. He and I are going through a summer long AI course, learning how to use everything from using it to create art to using it to do better searches, to edit video, to, you know, create and use it in a responsible manner, because it's coming and you have to learn how to use it. You have to be prepared to use it, to take advantage of it, to make us better, more efficient, and create things that we couldn't even imagine. When I look at AI, I'm so damn excited for what lies ahead, and to see that. And you know, we were promised flying cars, I think, by now, and we may not be there yet. But some of this AI is really incredible, to think. And you mentioned something about it that was a great segue into the next topic: deregulation around some of this and the geopolitical environment. You know, we are 6 months away, 5 months away from 2026. 2026 is a midterm year, and we are going to see all of this, you know, come to a head in that year. What is First Trust, or your opinion about, you know, as we start ramping up for that the midterms, and geopolitical risk? What do you see on that front?
Yeah, you know, it's one of those where it's still too early to tell, right? If you've
Okay.
got something that's happening 6 months before an election, at the moment that it happens, especially if it's something, the big beautiful bill, they'll talk about it. Do people like it? Do they dislike it? What's happening with immigration? Do they like it, dislike it? But when you're 6 months out, you know, emotions ramp up, and then in 2 months, we're not really talking about it as much. I think as we move closer to the midterm elections, people are going to be focusing on, you know, did we get inflation under control? Is the Fed progressing forward? How did GDP growth look? How is the employment market? And where do we stand in terms of quality of life? At the end of the day, it's the economy. At the end of the day, people look around and say, do I feel like I'm in a better spot, worse spot? Now, I will say with the midterm elections, the House is kind of what's up for grabs. On the Senate side, most of the Senate seats that are up for the Republicans are in kind of heavily Republican areas. There's, even though the Democrats have an advantage in terms of the Republican seats that are open, they're largely protected. I think the Republicans will keep the Senate, but I do think you're going to see a split. This is what we normally see in midterm elections: is you see whoever won the last election, you see a shift. So, I mean, that has a couple ramifications. It means that more of the big policy, more of the big game changer tax policy needed to get passed through in the first 2 years. Deregulation, I think you're going to see more of that movement here in the next 3-6 months. And then in the back half of this administration, it's having those pieces then go to work. Right.
Yeah.
And there are certain pieces on the tariff front. If you remember, go back to 2018, which is when we put in the tariffs on places like China. Some of these, well, there's a lot of fighting and a lot of discussion and name calling on TV. Remember that through the last administration, the Biden administration, they kept all those tariffs in place on China and actually escalated some of them because they did agree. They said, look, you know, China seems to have misunderstood the word copyright. They thought it meant the right to copy. There was a translation issue in there probably. But they said, look, at the end of the day, whether you're Republican, Democrat, you care about U.S. competitiveness, you care about job creation, you care about people having wealth creation and improving the life that they're living and the life that they're leaving for their kids. I think that when we get to the back half, 27, 28, we're going to be talking more about things like entitlement reform, where we've been spending a lot of money here in the United States, $1.7 trillion deficits the last 2 years. But for the next 6 months, I think a lot of what's been talked about, what's been fought about up to this point, when we start to see the implementation of it, how well that works, how well that's driving investment, driving growth, driving economic production is going to be the key determiner on how the groups are positioned leading into the midterms.
Yeah. So as we head into quarter three, one more tough question before we, have a little fun. What portfolio recommendations do you have for the third quarter? Where do you see things going from a equity standpoint, fixed income? What's the main theme from First Trust heading into Q3?
Yeah, no, so it's one of those, and again, it's always hard with looking into the future. You don't know exactly what's going to come up, but I will say I think there's going to be some focus in the big beautiful bill that R&D expensing and some of the changes that are happening in terms of international revenues. This was kind of a not as much talked about piece, Section 899, that was in the House bill that was going to increase potentially taxes on foreign investors in the United States from countries that the U.S. deemed had bad tax treatment of the United States. That didn't make its way through to the final Senate bill, but what it did is it led to a discussion with the G7 countries, and the G7 countries said, look, we don't want you to have this in there. We don't want our people to be impacted. So here's what we'll do. We'll give U.S. companies exemptions on minimum taxes in places like Europe, and that is going to have an impact. It's mostly infotech. It's mostly consumer services or communication services, some consumer discretionary that is impacted. Now, the tariffs are going to impact some goods companies. The tariffs are going to impact components that go into some of that infotech. And if we were to see on August 1st, if we were to see a real rise in tariff rates, we really see an implementation, which I'll be honest, I don't think if it goes into place and the markets start to fall and the markets start to react, Trump usually backs off when he sees the market reaction. But if that were to hit and sustain, that's going to impact where valuations are high. And infotech does have some of the higher valuations right now. I still think industrials are a very interesting place. I think in order for this AI infrastructure that we're doing, you need to build it, you need to power it, you need to protect it. I think themes around data transmission, themes around securing. But at the end of the day, right, we can look out for a quarter. We can look out for a week. We can look out for a month, and we can try to identify those areas that are going to grow faster, but having a diversified portfolio. Not overweight too heavily in goods versus services, not overweight too much in equities versus bonds, as you know, and you talk about so much with your clients, right? You build these plans that get us through time. So you don't have to be right every week, every quarter, every month. You don't have to be right exactly how each piece is going to play out. You build that portfolio so that you can have that patience, right? It's like planning plus patience equals prosperity. And so we're not making huge shifts in terms of the investment portfolios. We do see some positioning opportunities, but broadly speaking, we're not tweaking the dials too much. One area we're looking at, is international outperform the U.S. in the first half of the year. I think a portion of that was that the U.S. did massive imports. The U.S. did massive imports during the first quarter to front run the tariffs. And because of that, we sent hundreds of billions of US dollars out into the global economy in order to make those purchases that push down the value of the dollar. And historically, international outperforms when the dollar is weakening. I wouldn't be surprised to see a little bit of that reverse in the second half of the year. If we see a little bit of dollar strength and again, a focus on who's driving revenue gains. The U.S. is growing earnings faster. The U.S. is maintaining more of every dollar that's produced. We've been more efficient with our assets. We've been more productive with our assets. I still think the U.S. is the greatest place in the world to grow a business. I think it's the greatest place in the world to invest in a business. And so I still think, U.S. international got some push at the beginning of this year. I think U.S. will be a stronger portion in the back half of the year.
Awesome. Great insight. Thank you for that. All right, we have a little bit of fun as we wind down this episode. We have a tradition that I have totally stolen from the Diary of a CEO podcast. And at the end of his episodes, he always asks his current guest a question from a previous guest. And it's a way to tie us all together. There's a lot of stuff that goes on with our wealth. We're always moving. So it's a great way for us to tie all our guests together. Our last guest, Stan Vicari, is a fitness coach to celebrities and executives. And we had a great conversation about our money, our health, and fitness and tying that all together. And his question to you was, if you could go back to one point in history, recent or as far back as you can think, where would you go and why?
Oh, man. I mean, if I could go back to any point in history, I would go back to 1775, 1776. If you think about The US, we are 4% of the world's population that produces 25% of the world's output. The system that got put in place by the founding fathers has proven to be the most sustainable, the most prosperous system that was generated. And here you've got these people who are making decisions where they were essentially trying to remove themselves from having too much power, and the influence, the decision making, the logic, the thought process from those founding fathers. I would love to have sat in that room,
Yes.
sat in the back of the hall, and listen to those discussions, listen to the decision making process they use, because I think what they've created, what they generated, was just so magnificent, so powerful beyond what anything I think they could have imagined. I would love to go back and be a fly in the wall to listen to how we made the structure that we live in today.
You think they would? Do you think they would be proud of us?
I think they'd be amazed. I
Yeah.
think they would be shocked at just how much has been accomplished, how much has changed, what we have today. I think some areas we've gone. I mean, you think about it, like they moved to the US. They moved away from Europe in order to have more freedom. They were trying to get out from underneath the thumb of government. And there are certain things we've grown government massively since then. If you go back towards
Right.
the early days, 2.5% of GDP was coming from spending from Washington. Today, that number's closer to 25. And that is something. It's impacted our debt. I don't think they'd be thrilled to see the debt numbers that we have, but to see that freedom has remained and that it's done so well, to see the way that we've integrated so much of what's happened from so many other places in the world, when they to look out and see how entrepreneurship and innovation is rewarded here more than anywhere else. I think there's a lot of areas where they would be incredibly impressed and pleased to see it, but we've also made mistakes along the way.
Sure. Well, but they built the system to allow us to make those mistakes and learn from
Yeah.
them and correct them. And I gave the same answer when Stan asked that question. Was our
Okay.
revolution? I like the musical Hamilton, and my
Yeah.
favorite song in the musical Hamilton is "The Room Where It Happened." To be able to
Yeah.
be in the room where it happened and see and hear and but know what we know now, and hear them establish these systems and this structure for us to create what's been created and to hopefully keep it created so we can continue to grow and learn and develop. I think that point in time was one of the greatest gifts to the world that that we've ever had, that we ever will have, and continue to flourish. So I had the same time period. It would be kind of cool to see the pyramids being built, but I do. I would love to be walking around Philadelphia and Boston, New York City during our revolution and hear the thoughts. And now they're, unfortunately, I think they're now thoughts that we kind of take for granted sometimes, and that were so cutting edge in the 1770s.
Mm-hmm. Mm-hmm.
All right. So now it's your turn. What question
Yeah.
would you like to ask a future guest? We don't know who it's going to be. Even if I did, I wasn't going to tell you. So what question would you like to ask our next guest on the Wealth on the Move podcast?
If you could go back in time to be half your age, if you went back, 20, 30 years, what advice would you give your former self? What have you learned in your career? What have you learned in the second half of your life so far that you didn't understand going into it? Because I think there's so many lessons we learned that I wish we could
Sure.
tell our kids, that we should tell our kids. We learn so much through experience, and experience is one of those things, there's no substitute. So I'd
Right.
love to hear what they say.
What's did you watch the show Entourage when it was on TV?
Yeah. Yeah.
The one time when they go to the valley and Drama gets into the wrestling match with the big hulking high school age kid, and he says to the kid, "Hey buddy, nothing outweighs experience," and then he gets his butt kicked. But that's one of my favorite. That's one of my favorite lines. Nothing outweighs experience. But you're right. I think I would tell 23-year-old Will, quit being so damn afraid,
Yeah.
and let's put the pedal down.
Yeah, pursue
So,
it, act on
yeah.
it, get excited, follow your passion. If you're willing to work hard on something you care about, that you can do incredible things.
Yep. And that strive for perfection is always a fool's errand as well. And just stop being so damn afraid and let's go.
Yeah.
Well, Andrew, any parting shots, anything else you would like to leave our guests with before we sign off?
I'll end with this. I just spent time recently with my wife's grandfather, who he lives out by us. He turned 100 years old last year in October.
Incredible.
And every time I sit with him, the amount of perspective he gives is incredible. And we were sitting down at his 100th birthday party last year. He said, Andrew, I grew up in the Great Depression. I fought in World War II. I fought in the Korean War. My kids fought in the Vietnam War. I went through the race riots. I went through the inflation of the 70s. I went through double-digit interest rates and 20% plus mortgage rates. I went through the market crash in the 80s. I went through the dot-com bubble. I went through 9/11. I went through the financial crisis. I went through COVID. He said, the biggest lesson I've learned in 100 plus years on Earth is turn off the TV. And he said, we always get caught up in the current crisis and we forget just how much we've worked through, how much we've succeeded through, just how much we've accomplished. This pales in comparison to problems we've had in the past. So much of what we get caught up in the day to day. This is why you create the plans. This is why you have those discussions to say, we don't know what the future is going to hold. But if we stick to it and we continue to grow through it, he's like, he was tearing up and he said, I could never have imagined what this world was going to look like for my great grandkids. And it's amazing he gets to see it. Let's never lose the perspective of history. Take that time, read the books, talk to your elders, hear what they have to say, because they remind us constantly that things are a lot better than we think. We've worked through way more problems than we think. And our problems in the grand scheme of things, out of Washington, tariffs, tax policy, and all that, we've gone through much worse and we've made our way through.
Yep. Follow the lines that were painted before the fog hit, right?
Yeah.
Well, Andrew, truly a pleasure. That insight is incredible, and I appreciate you sharing that with our listeners. Where can folks find you if they want to follow and hear more from you guys and from First Trust?
Yeah, our team, First Trust, we are at Frank Thomas, firsttrustportfolios.com. If you go to the website on the left-hand side, you'll see a couple smiling faces. One of those is Brian Westbury, our chief economist. Everything our team produces. We put out a one-pager on every Monday. We write reports on each of the data pieces that come out. We put out a report on Thursdays that go through major trends. Everything is available to anybody who's interested. It's not behind any paywalls. There's no subscription. What we want to do is just bring information to the people, bring that perspective, help us frame the understandings. So FT Portfolios, if you're interested in following along, we post everything there.
It hits my reading list twice a week, that's for sure. Well, until next time, thank you so much for tuning in to Wealth on the Move, the podcast. You can find me very active on LinkedIn, just under Will Hoffman. Check out our website, hoffmanwealth.com. Make sure that you are letting us know what you think of these episodes, any future guests or topics you would like to discuss. Make sure you let us know in the comments. But until next time, make sure you keep your wealth moving.